Well, good afternoon. Welcome to Financial Friday. This is Matthew Atkins, and I'm here, as you can see, with my good friend Ben Scellick. Ben Scellick is actually the founder of Clearbrook Investment Management and also a CPA. We've been friends and coworkers for a long time, and it's just a great privilege to have him on here with me. Ben, you've been down in Dallas this week. You're back home now, kind of sitting in a relaxed environment. How you doing?
Doing great. Feels like came back to the cold and I'm in my hunting cabin and I'm ready to go.
Kind of looks like you're in a hunting cabin, actually. So got those nice pictures in the background and everything.
That's right. Yeah, it's a wonderful place.
I don't see any rifles hanging back there, so that's good.
No, it's a non-lethal hunting cabin. We don't kill anything.
Well, so here's what's going to happen. We're going to have Ben on for the next few weeks, and so we're going to have a chance to record kind of today a kind of an intro to the coming weeks, and then in the coming week we're going to drill down a little bit more. So today is going to be a little bit more rapid fire. I've kind of given Ben a little bit of insight as to what types of things I want to ask him. We're going to put him on the spot pretty hardcore, and then in the next couple of weeks we're going to talk about some of those issues that we touch on today. But hopefully we'll drill down a little bit, and particularly how Clearbrook Investment Management is dealing with what we see going on in the marketplace and how it can benefit and serve our clients and hopefully help others to learn as well. So, Ben, are you ready to go?
Let's go.
All right. Well, good. When you think about the S&P 500, so folks out there, the S&P 500 is a non-investable index. You can't just go directly invest in the S&P 500, but it's a collective of 500 stocks, mostly of the big players. There's actually a number of really, really big companies in there that affect a huge percentage of how the S&P does. And of course, if you've been following the markets at all, you know that we've been kind of inching our way up, hitting these all-time highs, bouncing off the top right and left. Today we came off that just slightly, but not really very much. So Ben, here's the question. When you think of the S&P 500 in 2020, 1 year from today, what do you think? Higher or lower than it is today?
You know what? Predicting the market a year out's a fool's errand, so I'm perfect for that job. It's a guess. Since the market goes up more years than not, I would guess it's going to be higher next year. I have no other reason why. If you're going to put money on it's going to be higher or lower, I'd say higher.
Wow, that surprises me a little bit.
Yeah. I've in a lot of our market comments, I've made my opinions about the market known, but it's really tough to predict a year out. So I'm just going to guess higher if I had to guess.
All right, good. So Ben and I are both sports fans. He's more into baseball than I am. I might be more into football than he is. But I asked him, so against the spread, here's what we're going to ask. If he had to pick between a spread of, let's say, plus 5 to 10% in 2020 or minus 15 to 25% in 2020, sounds like you might choose the upper one.
If I had to choose, I would choose the upper one. I think the downside risk is big. It's one of those things where you're probably more likely to have a positive return, but if you have a negative return, it's probably going to be a bad situation. So if I was just going to guess just on those two, I'd probably guess on the higher end.
Wow.
It would make me nervous. You know, when you play, when you're picking up pennies on a train track, you're most likely going to pick up another penny before you get hit. So that's the most likely scenario. I still wouldn't do it.
Okay, folks, let's go on record. I might bet against Ben on this one. I might say if I had to choose a spread, I might choose down 15 to 20. So there you go. The bull and the bear sitting right here.
I think it's totally within the realm of possibility. Whether it's next year, the year after, I don't know.
Yeah, who knows, right? Okay, so let's switch to bond prices, all right? Bonds have been doing great again. People have been calling for that to decline. We've got low interest rates, which usually people start thinking to themselves, it's probably going to go up. The interest rate's going to go up, which affects bond prices coming down. Where do you see bond prices in 2020?
Economists are correct on the direction of interest rates about 45% of the time. So flip a coin and you'd be better. So I have a coin, so I'm better. If I had a guess, though, I would guess that rates are going to go higher. We're talking about negative interest rates in the future. That could definitely happen. It just seems like the more likely scenarios, they're going to go up, but it really is almost a flip a coin situation where, your guess is as good as anyone else's.
Kind of brings me to my next one, which has to do with the Treasury. The 10-year Treasury today is about 1.82, somewhere in that neighborhood, I think. 1.817 if you want to get real technical. So you would anticipate that probably that Treasury rate's going to go up as well, or just the base rate?
Yeah, I would anticipate the Treasury rate's going to go up. I wouldn't bet the farm on it, but I think that's a very high risk. You know, inflation's running higher than the Treasury rates. The Treasury rate's yielding a negative real interest rate, which that situation can't hold forever. It's held like that in some foreign countries for quite a while, though. But I think all things being equal, I would guess that interest rates go up. But it's a coin flip.
Okay, so folks who are out there considering home buying or maybe refinancing and things, it's a historically low time, and they might want to consider locking something in.
Yeah, I would definitely think about locking something in, because your guess is probably going to be wrong about whichever way you guess, which way they go. I know rates are pretty good right now, so I wouldn't hesitate to lock something in.
Yeah, that's good. That's good. Okay, total change of pace now. Best sitcom of all time, Seinfeld or Friends?
Not even a question in my mind. Seinfeld is a giant among giants. I would go Seinfeld. I'm excited they're going to be on Netflix in a couple years. I don't have Hulu, so I'm a big Seinfeld fan. So easy one for me.
Yeah, there's more quotables in Seinfeld than I think any sitcom of all time.
Oh, it's brilliant.
Yeah, absolutely brilliant. Okay, so back to the financial stuff. When you think about where we would put money for our clients and kind of what we're looking at, where do you see as the best opportunities? We're going to drill down into the opportunities next week and really talk about kind of what happens when the U.S. market's sitting at such a high level. So is that still the best place? Is that still where we have the best opportunities, or what do you see?
Yeah, even though I think that if I had a guess at the market going to be higher or lower 1 year from today, I would guess higher. I think the market is poised for poor future returns based on current valuations. We can talk later more, but some pretty incredible things have to happen for the market to produce the kind of returns we want to return, at least the U.S. Large cap market. I think there's some opportunities in some of the value stocks. I think there's opportunities internationally and emerging markets that the situation looks a lot better, looking like a 10-year horizon. And again, any 1 year flip a coin, I'm not sure. But over the long haul, I think international and maybe there's some value things in the United States that are going to do a bit better.
Yeah, great. I'm looking forward to talking a little more about that, because it's something you mentioned value a number of times. When we talk about valuations and value investing, that's a pretty important part of who we are here at Clearbrook, and also in terms of kind of what we see happening. Earlier this year, maybe around September, a lot of talk about recession. I did a couple of sessions where I brought up some of the concerns about recession, the movement towards cash by some of the big cash holders, Berkshire Hathaway and others. It's kind of quieted down in the last couple of months. What do you think about a 2020 recession? Is that premature, or what do you see?
I think there's a pretty decent probability of that happening. If that did happen, you would see the stock market decline. You see the stock market usually decline ahead of a recession. In fact, the stock market's usually one of the indicators of a recession coming. One thing we really have to see is the jobs market kind of weaken a bit more. We were kind of on the threshold for some of our metrics where we were maybe technically over the threshold, but we want to see, we don't want to see, but if we're going to predict a recession, what we'd expect is for something the employment numbers to weaken a bit more. So they're kind of hanging in there. But as for now, most of the other things seem like there's a pretty decent chance of a recession on the not too distant horizon.
Yeah, okay, I'll throw you a little curveball. I haven't mentioned this one to you. This whole emphasis on the trade wars. Real quickly, how do you see it impacting our economy and our markets? And is that really what's driving kind of this up, down, kind of sideways, but still always hitting the peak right now?
Yeah, it's probably driving some of the short-term swings. Over the long haul, I'm questionable how much it really impacts things. There's a lot of political rhetoric, a lot of saber rattling, and so the market gets excited by that. Definitely, a trade war is negative for the market, negative for international markets, negative for the U.S. market. But the market's anticipating that. It's kind of priced in. You kind of have to look and say, what's the probability of what does the market think the probability is it's going to happen, and is the actual probability higher or lower? So the market's kind of priced in some of those trade war fears, and the question is the market correct or is the market incorrect? So it definitely has a negative impact, but I guess the question is it as negative as the market anticipates? I'm doubtful over the very long haul. Over the short term, you're going to get the ups and downs based on the news cycle.
Yeah, great. Really important question here, but you do a great job of working towards keeping a long-term view of the markets. We try to do a great job as a company of really helping our clients think through their risk tolerance. What's the best advice you can give an investor going into 2020? It's an election year.
Mm-hmm.
There's going to be a lot of stuff going on.
Yeah. If you have, as long as you have your assets allocated appropriately based when you need them, my best advice is there's a lot, I think too much emphasis is placed on who's going to be president, who's not going to be president. There's a lot of things. Cable news networks really exist to keep your eyes there and to be sensational, sensationalism, and they're not a good idea if you want to have a long-term view towards your retirement, to making decisions based on what CNBC says or Fox News or anyone. That's not a good reason to be scared or be excited. For the most part, over the long haul, we have a pretty good idea what returns are going to be. In the short term, we don't know. It's driven somewhat by fear and greed. But it's kind of like if you knew the price of your house and it went up and down every day, it's just not a good thing to pay attention to. It doesn't matter if you're a long-term holder. And so I'd urge you to make sure your assets are correctly allocated for your time horizon, and then ignore the news cycle, and you'll be a happier person as well.
Yeah, no kidding. I like that idea of just plug your ears. Probably the best thing to do. Hey, okay, one last one before we sign off here for this week. Seahawks' chance of making the Super Bowl this year.
Whew. They had a good, we're recording this not long after the 49ers game. That was an exciting game in overtime. So chance of making the Super Bowl, I would say 15 to 20%. It's still uphill, but I think, I think they look pretty good.
All right, so 15 to 20% chance of making it. That leaves maybe 85 to 80% chance of not making it.
Hey, I'm a Seattle fan. I'm jaded across all areas. I'm a Mariners fan. You mentioned.
Like I said, he was a Mariners fan. Yeah. So it's hard to get positive when you're a Mariners fan. So
I know I should have been a Sounders fan.
I give him a 70%, 65 to 75% chance of making the Super Bowl this year.
Wow.
So I've got high hopes.
All right. Well, I have high hopes too. I'm just pessimistic, I guess, when it comes to my sports teams.
All right. So we're going to drill down this next week. Listen, if you have a portfolio you'd like a second opinion on, we'd love to give that to you. If you have questions, you can certainly email us and ask questions of myself or Ben. I'll make sure both of our email contacts are down here. We'd love to hear from you. You can like this video. We're going to come back next week and drill down on a couple of key areas. So have a great weekend. We'll talk to you next week.
Thank you.